Good morning, ladies and gentlemen. My name is Greg Michalowski, and today's date is August 8th, 2022. Before we get into look at some of the Forex markets, let's review some of the other markets as we head into this new trading week. Recall on Friday, the U.S. jobs report showed much stronger than expected gains. We had higher wages. We saw a lower unemployment rate. All that led to higher interest rates, but the U.S. stock markets were mixed, with the Dow Industrial Average rising, the S&P near unchanged, and the NASDAQ falling modestly. We saw, and in trading today, we're seeing the stocks continue to move to the upside. The NASDAQ is up around 93 points, which erases the declines that we saw on Friday. The S&P is also higher, erasing its declines from Friday, modest declines, and the Dow Industrial Average was already up on Friday, so it's even higher today. So much for 528,000 jobs and lower unemployment rate and higher wages. Nevertheless, we follow what the market says, not what we necessarily think, so we have to respect that. Interest rates are also lower today after Friday's gain to the upside. We're seeing declines about 2 or 3 or 4 basis points across the curve. Europe, we're seeing interest rates move lower as well, and the stock markets over there are also moving higher, so it's got that bullish feeling. Let's get into some of the currency pairs. We'll talk about the euro versus US dollar here first, and this pair remains in its up and down trading range, and trading right around its 100 and 200 hour moving averages, which, as you can see, have crossed, with the 100 going below it and the 200 above it. The price is going to react off for both of them. They're near converged, and either we're going to move away from the moving averages to the top side or move away from them on the downside. The market just is unsure of which direction it wants to go. It tried to move to the upside here today. Well, it has moved higher overall from Friday's close, and we tried to move above the 2 moving averages but couldn't sustain momentum. And we also tried to then move to the downside here after failing above there, but couldn't do much there. We currently trade right in between the moving averages, between 101.90 and 101.98. Stick a finger in the air and see which way the wind is blowing, and maybe go with a trade if you're interested in that. If it gets too far away from the 200-hour moving average and you're short, get out. If you're long, and stay in and hope that it stays above the moving averages. Conversely, if it moves, if you are long and it moves below the 100 and 200 hour moving averages, then get out if it starts to move lower. If you're short, then you hope for the market to move down toward this area. On the top side, there's resistance up here for that currency pair. Let's take a look at the dollar versus yen. And this currency pair moved up sharply yesterday with the higher interest rates, but with lower interest rates here today, we are seeing a rebound back toward support, or the top of this support swing area between 134.31 and 134.58.7. As you can see, the market did come down to the top end of that range and found a little bit of support buying here for it. This is the old swing low through here that the market moved below, and we also moved below the 50% retracement level. So far we're holding where the price should not go below. Okay, so that's somewhat encouraging for the upside for this currency pair. But if we start to move back below the 134.58 and start to move below the 31, we could see a move back toward the 200, 100 hour moving averages, and definitely we don't want to see a move below that level if you're a bull on the top side for the US dollar versus yen. If you're a bear, that's where you want to get to and through. So you want to get through here, here, and here. Right now, as I mentioned, the buyers did come in against support, and we'll see if they can push the price above the 135.10 level and start to move higher toward resistance up through here. We have swing low and swing high and other levels here near the 61.8% retracement, 135.94, 95 area. Let's take a look at the sterling versus US dollar in this currency pair. Like the euros, moved higher, but choppy trading through here as the market moved above this swing area between 1.2089 and 1.20989. We are trading back above the 121 level and trading near the high, so the next target on the top side comes against the 100-hour moving average, which is declining here at 121.37.8. Move above that level, and then we're going to have the 200-hour moving average to get above at 54. and move above all those, and that's a more bullish bias, certainly to the upside. On Friday, we did see the price move sharply to the downside and tested this swing area through here, where we had high, and then broke below this level and started to use up again another high right here, and then after ups and downs through here, the market reestablished support and moved to the upside. So we came back down to that area and found support buyers against it, which gave the pair a boost into the weekend, and we're seeing some follow-through buying with the yields declining in the U.S. today and the dollar getting a little bit softer. Take a look at the dollar versus Swiss. It is recall from Friday, we moved above its 100-day moving average the second time during the week that the market tried to do that but closed right below it. In trading here today, we did try to move above that level in the end 38.2, by the way, in the Asian session, but failed. The market started to move down, and now we're in between the 100 and 200 hour moving averages on the downside, coming at 95.65 and 95.84. Moving below those levels would increase the bearish bias. Look toward this area right through here, which sort of outlines or is a prelude to the extreme here. So there is some support, especially on Friday. We came down to that area on 1-2 at different occasions. So get below the 200-hour moving average. That's where we're going on the downside. Right now we're kind of consolidating between the 100 and 200 as the market decides which way it wants to go in that currency pair. Take a look at the dollar versus Canada next, and it's always it's a wonder, but the Canadian jobs report came in weaker than expected, while the U.S. jobs report was stronger. That often is a recipe for further upside further momentum to the upside, just by definition of fundamentals, I guess. But the market came off that level, and we're seeing further weakness today with the lower U.S. yields and the rising stock market, I guess. And we're seeing the whole move to the upside retraced, and then some back down, like the euro versus U.S. dollar, like the U.S. dollar versus Swiss, in between the 100 and 200 hour moving averages. And the market has a decision to make. Which way does it want to go? Does it want to find support buyers against this level and push back above the 100 hour moving average? That's what the dip buyers want to see, with risk on a break below the 200 hour moving average. Alternatively, sellers want to see the continuation to the downside through the 100, through the 200, and start to move back toward their extreme lows through here, getting below the 120, 15 to 24 level would be the next major target to get to and through on the downside for this currency pair. A quick look at some of the stock markets. Why? Because we have some, particularly the 100-day moving average in play. Although we're moving higher here in the pre-market, but just to be aware of things like the Nasdaq index is above its 100-day moving average at 12,330.81. Stay above it is more bullish this week. The S&P index was a little bit trading above and below it all last week, but we are trading higher today and away from that moving average at 4117.75. That's bullish. And the Dow Industrial Average also traded above and below its 100-day moving average on Friday, all last week, and is trading higher today. So all of them are bullish above the 100-day moving average. We gotta respect that from a technical perspective in the U.S. equity markets. So there you have it. A look at some of the major currency pairs. My views on from a technical perspective, the risks. A lot of them are back to neutral levels between 100 and 200 hour moving average. We'll see how the day progresses. My name is Greg Michaelowski. Good fortune with your trading. Bye-bye now.